How much higher should we see WTI and Brent go?
It seems like on WTI, we're probably going to head up towards the $64 area. That seems to be where the next point of resistance and upside objective is on the chart. So I think just there's so much nervousness in this market, and we're kind of on a tear, and this is what happens in the oil market. A couple of weeks ago, we had a number of refinery outages that helped boost gasoline prices and pull crude up. This morning, there was also a separate report about another big drawdown, potentially, that we're going to see in Wednesday's report, weekly report. The situation in Libya now, interestingly enough, the general leading the insurgency into Tripoli actually controls the eastern part of the country already, where the oil has been flowing quite rapidly. So this shouldn't be that much of a concern. But right now, we need every barrel. If we lose the Libyan barrels right now, we can't afford that. And that's why this market's reacting the way it is.
So people who are, we just spoke about this, the gas price is up quite a bit this year. It's now higher than it was this time last year. Are you saying it's going to go a little bit higher yet, but only a little bit?
Well, we'll have to keep an eye on the situation with the ethanol, too. That's also exacerbating the situation. But to the extent the crude keeps marching higher, it's going to continue to go higher. I mean, in this ethanol situation, it's a weird one. It's affecting the coast real bad, particularly California. They're already over $4 a gallon there. New York is getting some Brazilian cargoes of ethanol, so that's not as bad here yet. But, you know, it's one of those things that can really sort of blow the lid off gasoline, at least just temporarily. So I think right now it's a slower grind higher, some higher. But some of these things that you're seeing, like we just reported on about the potential fraying of the OPEC-led supply cut deal, that could be a major impetus for prices then to reverse again.
On the coast, what is the primary driver of the march toward five-year highs? Is it ethanol or is it the price of WTI?
In California, it's ethanol. There's actually shortages there where there's dry gas stations as a result. In the New York area, we had a string of refinery outages and issues. Also along the Gulf Coast, we had that spectacular fire and oil spill into the Houston Ship Channel, disrupted shipping, disrupted production. So again, these sort of elements, we go on a streak like this once in a while in the oil market where the refineries blow up, they get hit by lightning. You know, everything you can imagine happens. The locusts come and prices get pushed higher. So right now we're in a mode where we're going to go a bit higher. We could see the national average approach $3 a gallon, which I think would be worrisome for the economy and the stock market, because that's when consumers' confidence starts to get hit.
That's pretty shocking that there's shortages in California. They just have a higher proportion of ethanol there, or they just literally can't get it there?
They just can't get the supplies from other sources like we can here from Brazil. Yeah.
Wow.
We mentioned Saudi Aramco. So right now, this would be at $30 billion demand for the bond offering. That would be 3 times the reported initial number. What does that indicate to you about demand for the IPO when there is one?
Actually, I'm hearing now it's gone up to $60 billion.
Oh, really?
Yeah,
oh, wow.
Yeah, so 6 times oversubscribed. It'll probably go higher. This thing's, you know, hotter than hotcakes, I guess. It means a couple of things. The prospectus was pretty interesting and revealing. Okay, the fact that the bonds got rated just about the second highest from Moody's and S&P tells you a lot. Obviously, they have plenty of money to cover this bond. That's why it's so red hot. And you know, some of the issues within the company, a lot of the things we were worried about with the stock coming public, if it ever does, were these disclosures, like the size of the fields, for example, how they're doing. There's some issue in this prospectus about their largest field, the Gawar field, depending on how you read it. You could say it's in massive decline, but also you could read it that this is how they get to a certain production level and how they manipulate that particular field. Just as an example, I think this really may, and I've been a big skeptic of them coming public with the IPO, with the stock. And I think the stock could end up trading something like a Tesla because of the sort of interference you would still be subject to from the government. So you'd roll out with a price. Say it's $100 a share, just to use a round number. After that, as you go down the road, they like to play games with taxation. They, you know, you have unbelievable commodity, straight-up commodity risk. The earnings from year to year to year really ride the roller coaster up and down with oil prices. So when you're talking about PE ratios, forward-looking numbers, earnings, government interference, the stock is a lot more tricky than this $10 billion bond is, where they have plenty to cover.
Tesla would suggest the stock will be just fine. I mean, depending on how you think that movie's going to end.
It's the sort of volatility.
Yeah.
I mean, the current Tesla, as opposed to Tesla when it went public, because when it went public, it was actually a good return for investors in the initial, you know, however many years of the investment.
I mean, like today's Tesla, where you have sort of an interesting CEO, an interesting governing structure. I'd be scared to think you buy the Saudi Aramco stock and just put it away.
Right.
Not happening.
Okay.